I think Bitcoin was it was a $90 billion asset class in March of 2000 when I was first looking at it. And then by August, it was about $180 billion asset class. And right now, 4 years later, it's $1.8 trillion asset class. And I think it's going to 18 trillion, then 180 trillion, then it's going to go beyond that. So I think it's a very simple thing. I think Bitcoin is going to grow from 0.1% of the money in the world to 7% of the money in the world over the next 21 years. And of course, you should just go long and keep buying it.
Renowned Bitcoin bull Michael Saylor and his software and business intelligence firm MicroStrategy have been quite busy in recent weeks. In addition to consistently increasing its Bitcoin holdings, MicroStrategy has completed a $3 billion offering of 0% convertible senior notes due in December 2029. According to Saylor, the firm plans to use a portion or all of the proceeds from the offering to buy more Bitcoin. The Virginia-based firm first announced it was raising $1.75 billion on November 18th and subsequently increased it to $2.6 billion on November 20th due to high demand. An announcement Saylor posted on social media platform X reads, "Given high demand, we upsized our MicroStrategy offering of 0% convertible bonds due 2029 from $1.75 billion to $2.6 billion, including a $400 million green shoe option, and priced it at a 55% conversion premium." Only a day later, Saylor had another announcement. MicroStrategy had completed the $3 billion offering at 0% coupon and 55% premium with an implied strike price of approximately $672, a predetermined price at which an option holder can buy or sell MicroStrategy's Class A common stock. The venture has been very successful for the software firm. As Saylor points out in another tweet, MicroStrategy stock fell to an all-time low of $0.42 on July 3, 2002, and rose as high as $499 last week. According to another tweet from Bloomberg ETF analyst Eric Balchunas, MicroStrategy's stock was the most traded stock in America on Wednesday. Eric's tweet reads, "Wow, MicroStrategy is the most traded stock in America today. To best Tesla and Nvidia is crazy. It's been years since a stock has traded more than one of those two. It's also about double SPY, wild times." In a recent appearance on the PBD Podcast, Saylor discusses MicroStrategy's Bitcoin strategy and why he is certain the leading cryptocurrency will hit $13 million in the coming years. As we bring you clips from the interview, please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thank you, and enjoy the video.
On October 30th, we announced our 21-21 plan. So $21 billion worth of equity we're going to raise and $21 billion we're going to raise in fixed income securities. And we filed this shelf registration to sell the $21 billion in equity in at-the-market offerings. So then the next week, we had the election, a lot of activity, the red sweep, and then that Monday, a week ago from today, we announced we'd actually bought $2 billion of Bitcoin. So that was like a $2 billion week, and it's like 27,000 Bitcoin or something. But then another week went by. So the announcement this morning was from last week's activity. So that's 5 days in the marketplace. So we did about $2 billion the first week, and we did $4.6 billion the second week.
This is the biggest ever, biggest purchase you've
Yeah,
ever
I
made.
think it's the biggest Bitcoin purchase ever. Yeah, so $6.6 billion since we had our quarterly results. So, I think it's like 41, 42 times we bought Bitcoin in that range. So ever since August of 2020, we keep buying, we don't sell. It's a very simple strategy. Bitcoin is Manhattan in cyberspace. I just want to keep buying Manhattan in cyberspace. I have this theory that one day 8 billion people want to put their money in Manhattan in cyberspace. And of course, the more we bought, the more transparent we are, the more the capital markets get behind us. So now, if you're an investor on Wall Street and you're looking for the company that's going to buy up cyberspace, then you're buying MicroStrategy stock. And some people like Bitcoin, so they buy Bitcoin. Every day of my life, I tell people to buy Bitcoin. Some people want more Bitcoin, right? The joke I have is the only thing better than Bitcoin is more Bitcoin. So we borrowed $4.2 billion at 82 basis points, and we bought Bitcoin with it. So for the people that like Bitcoin, they buy it, but people that really like it want to borrow a lot of money and buy more. And then there's another group of investors, the convertible bond investors. And how do you buy Bitcoin at the all-time high and get the upside but don't have the downside? So you buy the bonds, and it turns out that our bonds have outperformed Bitcoin, but they're bonds. And so that blows people's minds that we can actually sell you a bond. They don't just outperform all the other bonds. Some of these bonds are, they're trading 200 plus against 100 basis. So they're up 100%. So they outperform all the bonds, but they also outperform the Bitcoin. And that's because we've created a public company with a tiered capital structure, and we've got a lot of permanent capital. Then we've got the senior bonds and the capital structure, and then the equity, generates a BTC yield. And so a lot of Bitcoin maxis pile into the equity, and that gives us a premium. And we're able to use the premium from the equity in order to create very accretive capital markets transactions with the bonds and the rest of the equity. And so the way it works is we're selling convertible bonds. And the convertible bonds have a bond component, and then they have an option component, like a call option. And so the convertible arbitrageurs and the options traders, they like the volatility in the stock. One thing you might not know is we have the most volatile stock in the S&P 500. So if you took all 500 stocks in the S&P 500, you said, which is the most volatile? Like, we're like 100 vol. The S&P, the VIX is like 15. Most of the Mag 7 stocks, they would be like 20, 25 vol. Bitcoin is 50, so it's like 3 to 4 times the volatility of the S&P index. MicroStrategy, we lever the Bitcoin, so we get 2x that, so we get to 100. And conventional investors are afraid of volatility. They fear it. They're like, I can't handle the volatility. But volatility is like RPM in an engine. It's like spinning at 100 RPM instead of 10 RPM. So if you plug volatility in the Black-Scholes equation, the options are a lot more valuable if you have volatility.
There have been criticisms against Saylor's strategy, but the business executive maintains that MicroStrategy's large volatility, large liquidity, and durability make the convertible bond a safe option for investors. He compares MicroStrategy's liquidity and volatility to a massive weapon being spun by an equally massive force, noting that both will combine to achieve something exceptional and remarkable. He also emphasizes the importance of stocks like MicroStrategy, noting they give investors who can't access Bitcoin directly, mostly due to regulator constrictions, adequate exposure to the leading cryptocurrency. According to the renowned business executive, investing in MicroStrategy stocks gives you access to Bitcoin as well as exposure to the financial power of a company with one of the cheapest costs of capital in the market. Of course, MicroStrategy's solid Bitcoin strategy is the biggest perk. According to the Saylor tracker, MicroStrategy currently holds 331,200 Bitcoin, worth over $32.7 billion, the most of any public company, and intends to buy more in the future, basically because of Saylor's unwavering conviction in the leading digital asset. Here are more clips from the video.
I think Bitcoin was it was a $90 billion asset class in March of 2000 when I was first looking at it. And then by August, it was about $180 billion asset class. And right now, 4 years later, it's $1.8 trillion asset class. And I think it's going to 18 trillion, then 180 trillion, then it's going to go beyond that. So it'll go from like 1.8 trillion to $240 trillion, and it'll go up 29% a year, ARR. That is my base case.
And I've heard you say that in 21 years, it's going to be at $13 million
That takes you to 13 million a coin.
13 million a coin.
13 million a coin.
At 29%.
Every Bitcoin you don't buy is going to cost you $13 million, my friend. Basically, what I'm saying is that the 29% ARR is the risk-free cost of capital in the crypto economy. And the way you get to that number is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster before that. But right now, Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. The mainstream economy is plus 15 points. Bitcoin is 60. They're going to converge. As Bitcoin gets to the size of the S&P, when it's 100 trillion or 200 trillion and it's close to the S&P, it's going to be 1.5x the performance of the S&P and 1.5x the vol. The VIX, which is the S&P volatility, is about 15. The ARR is about 15. Bitcoin's like 60. I mean, you can figure it out from the law of large numbers. When Bitcoin's a $100 trillion asset class, it's not going to be as volatile. And of course, at some point, companies in the S&P are all going to hold Bitcoin. And so like if MicroStrategy gets in the S&P and Tesla owns Bitcoin and other companies, if Microsoft starts buying Bitcoin, pretty soon the performance of Bitcoin is going to goose up, is going to improve the performance of the S&P, and then Bitcoin's going to converge. Bitcoin's always going to be more volatile because it's 24/7, 365, and it's always going to be higher performance because it doesn't have the risk factors of property or companies and the like. That's a very useful chart. You can pretty much understand the world if you focus on that, which is if you capitalize on bonds, you're minus 5%. That's why all the banks are struggling, and that's why operating companies can't accumulate capital. Because what that's telling you is that if you're using bonds as capital, it's toxic. It's sucking 5% of your life out of you. And look at the cost of capital, 15%. So here, if you use bonds, you're minus 20% versus the S&P. That means that it's an awful, way to build shareholder value. If I asked you, do you want to hold $100 billion of cash in bonds and you're Apple or Microsoft, the answer is no, because it's minus 20%. You might as well just give it back to the shareholders. They put it in the S&P index. But now look at the other side, right? Bitcoin is 4x that. So if I said you could put $100 billion into bonds or $100 billion into the S&P or $100 billion into Bitcoin, which of the three charts do you want? It's pretty obvious. You take the 60%. So what MicroStrategy did is we capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. That's why we outperformed NVIDIA. We're 2 or 3x NVIDIA over this time period, because we're actually capitalized.
In other news, MicroStrategy has acquired another 55,500 Bitcoin for $5.4 billion, its single largest Bitcoin purchase, after it announced the acquisition of 51,780 Bitcoin for approximately $4.6 billion earlier this month. Saylor's announcement, which sent the entire Twitter crypto community abuzz with excitement earlier today, reads, MicroStrategy has acquired 55,500 BTC for approximately $5.4 billion at approximately $97,862 per Bitcoin and has achieved a BTC yield of 35.2% quarter to date and 59.3% year to date. As of November 24th, 2024, we hold 386,700 Bitcoin acquired for approximately $21.9 billion at approximately $56,761 per Bitcoin. With the combination of MicroStrategy's consistent accumulation and all the buying activities from IBIT and other spot Bitcoin ETFs, Bitcoin has remained on a consistent bull run and has hit multiple lifetime highs in recent weeks. This is expected to last much longer, well into 2025, as institutional demand is showing no signs of slowing down. According to recent reports from Cointelegraph, spot Bitcoin ETFs bought around 34,860 Bitcoin last week, while only 3,150 Bitcoin were mined. This is the supply-demand imbalance prominent investors have been talking about since IBIT and other spot Bitcoin ETFs were approved in January. Eric Balchunas describes the massive surge in demand as Pac-Man mode, noting it will be unbelievably bullish for the leading cryptocurrency. Do you agree with Saylor's super bullish $13 million prediction for Bitcoin? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.